Good morning, everybody. Welcome to the December 5th issue of the Tucson Mortgage Weekly. I am Todd Abelson. Thank you very much for watching this video. I do appreciate the few minutes you're providing to me. Okay, anyway, let's get right off to it. But first, 21 days till Christmas. Do you know where your packages are? Okay, because obviously we're not going to be able to send them to the post office anymore because it appears as though they're going out of business. So I guess the guy that invented Federal Express is probably laughing all the way to the bank now. All right, back to what's going on in the mortgage business. Okay, last week, the big news was the jobs report came out, and actually it came in November for 120,000 new jobs, which was pretty much on target with what they had expected. But what actually also occurred was twofold. First of all, there were upward revisions for September and October of an additional 72,000 jobs. And probably more of a shocker was that the employment rate dropped to 8.6%. Now, there's been a lot of discussion as to, gee, maybe the employment rate would have dropped a bit in September and October had the 72,000 already been counted in at that. So maybe it was, just a very quick knee-jerk reaction. But the market, of course, went into all kinds of gyrations, up and down, up and down. But the bottom line is, it's definitely a sign that the economy is continuing to improve, albeit very, very, very slowly. One of the key points to remember is the U.S. economy needs approximately 200,000 jobs a month to break even. So even at 120, we are negative 80,000 for the year. Okay, well, what's going on this morning? Well, two things happened really late last week and over the weekend. First of all, there's momentum building upon and between the 27 European nations that are involved in the euro, trying to figure out how to better coordinate their budgeting process so that they don't end up with as many deficits, because ultimately the big difference between Europe and the United States is we can print money. They can't. So unless they budget correctly, they're going to end up with the problems, and it's going to spread and perhaps get worse. So ultimately they're trying to run a balanced budget throughout the countries, and a better communication is really very critical. The other thing that happened is late last week, there was some global injection of liquidity into the European system, much like what they did here in the United States. So obviously that's helping bolster Europe up a bit longer. This week, few reports coming out, consumer sentiment at the end of the week, blah, blah, blah. But probably most important is what the heck is going to go on in the stock market, because we're going to see stocks and bonds this week is going to be exact opposite the way it traditionally is. Surge in bonds is also going to see a surge in rates. Okay, number one, Santa Claus rally. This is usually the time of year we see such a thing. Will we see it this year? Number two, the continued rumors about whether the Feds are going to start to buy mortgage-backed securities again, which would help keep interest rates low. In fact, that's one of the reasons we are still at the rates we are now, is the potential and the hope that the Feds will continue buying mortgage-backed securities. Number three, the European debt crisis. Okay, what are these countries and governments going to do? Is it going to get better? Is it going to get worse? Or is the euro going to just plain crash and everybody's going to go back to their own monetary system? Who knows? But those are the things that are going on. Anyway, don't forget to check out the website and the blog site, TucsonMortgages.com. Give me a call if you have any questions, 331-LEND. I'm Todd Abelson. Thanks a lot, and make it a great week. Bye-bye.